Hi guys, can everyone hear me okay?
Yes, sir, you're audible.
Yes, sir.
Yes, sir.
Yes, sir.
Wonderful, wonderful. How's your day going? Anyone need a
Very
break?
good.
It seemed like there was a lot of
Very good,
enthusiasm for questions in the last
It's
session.
been pretty interactive, sir.
Wonderful. I hope to continue that interactivity because I'm counting on, asking more questions. I've always learned by asking questions and discussing them more than kind of presentations. So I consciously decided not to do sort of a presentation here so that we could maximize time for questions. That said, I think, the team did ask me to kind of go through a few questions. So what I thought I'd do is spend, maybe the first 10, 15 minutes talking through some of those questions and then go into a more interactive question and answer session after that. Does that work?
Yes, sir, sounds good.
Yes, sir.
Wonderful, wonderful. Okay, cool. So I think the first question that they wanted me to kind of touch upon was, and in this case, I'm covering entrepreneurship and venture capital. They're intertwined, as you will see, but they're quite different, right, in terms of career paths, choices. And so, I'll talk about both, and I'm happy to answer questions about both because I've been both. So that's, one of the advantages. So, I think the first question they asked was, hey, what's a brief, intro to entrepreneurship and VC as careers? And, the way I've thought about this is the best overview of what entrepreneurship is comes from Reid Hoffman, the founder of LinkedIn, who I had the pleasure of kind of, working closely with. He used to say, entrepreneurship is about jumping off a cliff and working furiously to build a plane on the way down so that you kind of fly and take off before you crash, right? So it is no holds barred. You're in this space, you're trying something new, and you're figuring stuff out as you go, and hopefully that plane gets built and you start taking off, right? That's really a definition of entrepreneurship. Whereas if you think about venture capital as a whole is kind of about finding such stellar entrepreneurs who are worth backing, who have these BHAGs, right? These big, hairy, audacious goals, and then assisting in, helping those dreams take flight. So if you think about it, an entrepreneur is a doer, whereas sort of a venture capitalist is an enabler or a facilitator, right? That's one way to kind of think about this. And while the day-to-day of an entrepreneur is a lot more reliant on being more operational, you're getting stuff done, you're figuring it out, you're problem solving, brainstorming. The VC path is a little bit more longer term. So it needs to be more strategic than operational. And it tends to, you try to think about 3-5 years ahead, whereas an entrepreneur is thinking, 3-5 days ahead or, a quarter or so ahead. And then, the entrepreneur's world, I mean, any good entrepreneur's world, he or she is all consumed by, the job he or she is doing. And so the focus is mainly on what's happening within my four walls, right? You're looking inside, you're looking at what's going on with the company, with the product, and so on. Whereas the focus of the most venture capitalists is kind of what's happening outside the four walls. Or what are the macro trends happening in industry? What does that mean for my companies? And what's the impact going to be, right, to the inside the four walls? So then you identify those problems, and then the entrepreneur might brainstorm through them with you. Let me pause there. Actually, maybe useful to kind of, take a pause after each of these questions to answer further. So at a high level, I'm hoping that you guys start understanding what's the macro difference between being an entrepreneur and what's the macro difference between being a venture capitalist. Does that make sense?
Yes, sir.
Okay. Feel free to stop at any point, ask questions if any of this stuff isn't making sense to you. So that's kind of a brief introduction to VC and entrepreneurship as careers. The second question I think they asked me was, hey, what's the required skills or qualifications or attitudes required to be either an entrepreneur or a venture capitalist? So I think I'll start with the entrepreneur side first. The first and foremost and most important as attribute, if you will, or attitude is you have to be comfortable taking risk, right? And you have to combine that with, like I said, a BHAG, like a really big, very audacious goal. Like you're ambitious, you want to change the world in some way, shape, or form, and you're comfortable taking risks. Because guess what? You're going to be taking risks on ideas that you have. Should I back it or not? I have only finite amount of capital and runway in the company. I'm going to bet the farm and take the company in this direction. If it's right, awesome. If it's wrong, your company could be dead. So it's that stark, how one goes about it. And so, you have to be comfortable taking risks. Similarly, you're taking risk on people. You're betting on, people joining your company, adding value to it. And so, and in a lot of cases for the startup, the early employees themselves are taking risk. And so, it's not that easy, but you still need to know which ones to bet on and which ones not to. Similarly on deals, right? Like every startup has to, eventually you're selling a product and you're making money. So you're taking risk with your client partners and, pricing of deals as well. So broadly speaking, one of the most important attributes is this comfort, being comfortable taking risks. The second one, is tenacity. So, there's always going to be challenges that all of us face in daily life, but in an entrepreneur's life, those challenges come like every single day. I mean, and they're different challenges. There could be a big strategic threat that, oh my God, my competition just did something, or Google just decided to come into my space, right? It could be as big as that, or it could be as small as, okay, there's like, I don't know, a vendor who is not, or a customer who's not paying us, and so what do we do, right? And how do we keep the company afloat? So there's a lot of challenges that come with entrepreneurship, and that, that is the fun of the journey, right? Dealing with those challenges and showing that tenacity, that perseverance to go through it. And that's why I'm calling out tenacity as a specific trait, because it's really important. There'll be more down days than up days in general, I guess in general in life, but especially in entrepreneurship. So you have to have that tenacity. The third attribute is, I would say, impatience. Impatience, because you want to you need to move fast, especially when you think tech entrepreneurship. You have to think about, hey, what's my MVP, my minimum viable product? Let's prototype this, check it out. Let's experiment with the different ideas to see what works. Because you're charting a new course, right? So that's the third, which is around impatience. The fourth comes, domain knowledge and passion. So, whether it is domain knowledge for a particular industry because you happen to come from, I don't know, media or banking, finance, and so on. And so you understand that space, and hence you can have a different, a unique lens on that particular problem that you've decided to solve. And so, that gives you a leg up on others who might be thinking through the same problem. And then the passion comes from, okay, I love this problem. I want to solve this problem so badly that it gives you that tenacity, right, to survive during the hard times, which I guarantee you as an entrepreneur, you'll find. That domain, some knowledge sometimes can come like by industry, like I talked about, sort of, by vertical, like so BFSI or telco or whatever, or it could also come from function. So, you could be a tech guy, right? And that's your real domain, that you understand, the new world of containers and CI/CD and so on. Or it could be that, your domain knowledge comes from sales. And so hence you can understand, how do I build better software for salespeople, etc. So the fourth sort of attribute I'd call out is domain knowledge and passion. The fifth attribute I would say for every founder is you have to have latent sales skills, and it's in your own unique way. So there's a lot of tech founders I've met who are not really sales. They hate sales, right? They're techies, but in some way, shape, or form, you have to be selling always, right? Your idea, your company, to get your first employees to join and take their bet to say, hey, look, put your life in my hands, put your income in my hands. Even as a tech founder, you need to have that ability to sell yourself and sell your ideas. You have to get your first client to take risks, saying, hey, I have no other customers, but you're going to be my first, and I'm going to do everything possible to make you successful. You have to be able to convince a bank or a venture capitalist or whoever, angel investor, to give you funds. So you have to have that latent sales ability or sales talent to inspire people and get them to follow you to do something, right? So that is sort of the fifth attribute, which is around sort of sales talent. And then
So,
the last, yeah,
I'm so sorry to interrupt you, but I
not at
have a
all.
question. So, when it comes to venture capitalists, do like the businesses that they're investing in, the entrepreneurs, do they have to be at a certain level of, um, like in terms of like what they've done or like where they've come in their process, or is it like startups as well?
Sorry, repeat the questions. You're saying, do venture capitalists, what stage do venture capitalists come in at? Is that the question?
Yeah, yeah.
Okay. Yeah. So look, there's different stages of a company, and there's a different venture capital funds have different entry points. So you have kind of seed capital or very, very early stage when the idea is just still on a napkin, the idea is kind of fleshed out, but hasn't really, you haven't got a product or a concept. So that there's that stage, angel investment, which, people can individually do, but there's like angel funds that are dedicated just to kind of coming in at that time. Then you go to sort of, pre-series A. Series A is typically a first formal round of venture capital, but, pre-series A, there's some funds that enter around that time. Then series A is when you're starting to just get your, MVP of your product, and you're able to show something. Say, okay, I had this idea, but here's a product that gives you a sense of, why that is sort of so cool. So, there's venture capitalists. Most early stage venture capitalists enter in that, pre-series A, series A round. Um, then you can, you have people like us. We are growth stage investors. We look at companies, that are past 10 to 30 million of annual recurring revenue. So we have a focus just on the guys who are scaling. So they've already got product market fit, and they're about to kind of, grow, and you want that growth capital to double down on your sales team, go faster on product, whatever. So there's people like us who come in growth stage. Then there's people like SoftBank and Tiger that come in, at even a later growth stage where, you need like $50-100 million to scale the company. So there, and then, finally you have the private equity players who typically, come in even later, just at the pre-IPO, IPO stage. And then obviously public market investors. So the gamut of investing runs from the start of a company to the end of the company. It just depends on, which fund is focused on, what is the thesis that they have.
Hi, Mr. Nishant. I just want to add onto the previous question. So currently, I'm working on my own startup, and we've passed the ideation stage, and now we're looking to formally start as a startup. But the thing is, I live in the UAE basically, and the cost here to register a startup is immensely high. I'm talking $30,000 at minimum. And is there a way where I can possibly try and reduce it? Because frankly, we're all students, and we don't have that sort of that sort of money.
Yeah.
So what would be, yeah.
Yeah, look, I am not as familiar with the UAE startup laws per se, but I do know the Abu Dhabi government, and they have a couple of accelerators, incubators that can allow you to come in. So I think ADIB does something which, as long as you kind of operate out of Abu Dhabi, they have like a co-working space. They'll give you some initial seed capital, and so on. So I'm assuming that if you go in through those, then maybe they get the regulatory hurdles kind of done easier, or maybe at a slightly cheaper cost. So you should check that out. But outside of that, like I said, typically most entrepreneurs, when they start, they do a friends and family type round to say, okay, give me some capital to help with this. But if it's purely regulatory fees, that is this $30,000, then obviously you're going to have to pay it. It's how you raise capital to help you do it. But I would check out a couple of those incubators, accelerators to give you the advice to that specific question.
Right. So yeah, we are currently also working on a pitch to our friends and our family for the initial round of investment, which might help us cover the cost of registration. But after that point, after we pilot and we test the market if there is an opportunity, how do I network and try and find investors or angel at investors as such? Although we would have piloted by then.
Yeah, look, I mean, I think, who the angel investors in your respective country and all that should be known at this point. If you have any friend who's, somewhat into venture capital or private equity, he or she would be able to kind of, give you that advice to say, hey, this. And once, I mean, this is like a small network, right? So once you meet one person and they get excited. So I do angel investing outside of Avatar, because Avatar is growth stage. I do more early stage. Um, and I know I have other angel investors I typically co-invest with, right? So they sometimes you'll see a deal, they like it and say, hey Nishant, you really should take a look, or vice versa. And so once the ball gets in motion, then eventually these things have a way of kind of getting ahead. So I'm happy to if you drop me a note, send you put you in touch with one or two friends who are VCs in the region, based out of Dubai, and maybe they can advise you, because I haven't operated in that space. I've operated it from an operator standpoint, like at Freshworks and LinkedIn, but never as VC. So yeah.
All right. Thank you. That'd be helpful.
Cool.
I have a question. Could you help explain what a vulture capitalist or a vulture fund is? I came across it in my syllabus when my teacher could never explain it to me.
Yeah, it's a cute play on words to basically dig in and make bring to light the fact that, that we have, like, as venture capitalists or private equity folks, we're putting in money and taking risk, in companies. But, a lot of times the terms of those can be quite onerous. They used to be. I mean, I think that's changing a lot, but they used to be very, repressive terms, in terms of very high hurdle rates that the entrepreneur had to give back that much money, or they used to maybe take a very high ownership of the company, saying, okay, I'm only giving you a small amount, but I'm going to take 30% of your company, right? And so as a founder, you're putting in your blood, sweat, tears into this, and as a result, you should enjoy the upside, right? But what happens in such situations is the founders diluted so upfront very early that even if they have a breakout success, they make very little, and the capitalists, the vulture capitalists, as you will, make a lot. So it was kind of a term saying, okay, these guys are vultures, and they go in for the kill. Obviously, a lot of that is fixing and changing. Like the US is far ahead in terms of being more entrepreneur friendly in terms of their investing policies. I think I'm starting to see that already in India. So we do growth stage investing. So we often see these term sheets that came in with early rounds with quite onerous conditions, right? Like the entrepreneur's house is attached, right, to this. So if something goes wrong, these guys will take over the house. Stupid stuff like that. But I'm also seeing that start to dilute. So as you have the Y Combinators, others coming in, they're starting to standardize this and make it less onerous, and hence, so I hope that fixes. But just like with anything else, right? You have a money lender, you have banks. In a lot of cases, if there's no options, you still go to that money lender. They charge you maybe 60-70% interest rates. It's kind of crazy like that. So they still, I mean, I wouldn't say it doesn't happen at all, but it's definitely on the mend here in India. And as entrepreneurs, I would encourage all of you to be thoughtful about sort of who you're taking money from, and can they help, and are these terms very onerous? Now you also have to realize, and sometimes the press takes this to a little bit of an extreme, but like the venture capitalist or the angel investor is also taking a bet with his or her money on an idea that God alone knows whether it will happen or not. And a person, God alone knows whether they'll work hard enough to make it happen or not, right? So hence there is a, risk that they are taking with their own money and their own careers. And hence, like there has to be some return in it, right? So I do ascribe to the fact that there is a risk premium, and it just needs to be done in a way that is entrepreneur friendly and company friendly rather than with very bad terms.
I understand. Thank you.
Great. Okay, oh yeah.
I had a question. So, for example, like I'm working on an idea, but a problem is that people are thinking me being too young to pitch that idea. So, how do you deal with that?
You paint some white hairs on your head and you go and pitch the idea then. No, I'm
As
just
in,
kidding.
like, uh,
I'm just kidding.
I am a
Look,
bit.
I think it comes to your passion, right, Aryan? I mean, I think every VC worth their salt actually likes youth for a couple of reasons. One, you have a lot of energy. Two, early on in your career, you can take risks. I can't take as much risk, with 3 kids and going to college and stuff like that, but you can. And you bring that. So if you can showcase the passion that you have for the idea and why you would be the better person to fix, to solve this particular problem, then age doesn't become a barrier. I mean, and if you're, especially in today's day and age, if you're running into those guys who are saying, hey, look, why aren't you gray haired with the idea, then there are traditional investors, right? Like some large healthy family, and so he or she has a thought that the ideal founder should look like this. Those guys I would avoid. But in terms of now, especially in India, the ecosystem is flush with cash, and there's tons of early stage funds. You should not have a problem pitching, and they'll actually like youth. So I think maybe you'll run into one or two of these unique circumstances, but remember that you only need one. You need one investor to get you started. So yes, you'll have, that's what I meant by tenacity, right? You'll have 98 failures, but you'll have 2 good conversations, one will convert, and that's all you need.
Okay. Yeah.
Yeah. The more important thing though is that relevance, right? Why Aryan is better suited to solve this problem? A, is the problem big enough? So normally early stage, you look at, I say we look at 3 things, right? You look at team, TAM, and tenacity. Who is this team? Have they worked together, and do they bring something credible to the party, right? The unique lens for this problem. What's the TAM? How big is this problem? If it's like a tiny problem, it's kind of nice to have. then that's not exciting. But if it's a massive TAM, large market, opportunity to go after, that's exciting to to investors. And then the tenacity. Will they actually, when the going gets tough, and it will this team be able to kind of make it work? Now, I've seen personally when I was chairman for IMAI, we did so many of these kind of pitches and so on. At that time, this was when Zomato and Swiggy were kind of taking off. I cannot tell you how many people, in those pitches said, I got the next food delivery company. Why? Oh, because I understand Lajpat Nagar better. Come on, dude. Like, that is not differentiating, USP anymore, right? Like, you have to think about the problem completely differently. And so oftentimes entrepreneurs, young entrepreneurs particularly, take for granted that I am the best. But you have to really ask yourself, is there something unique that you're bringing to this problem? You've faced some problems and hence you understand it better, or you have had certain experiences that give you a better lens. And you have to be honest with yourself and each other as a founding team to say, do we have something unique here or not? And if it's not, that's fine. Go look for the other idea where you are unique. And I think most young entrepreneurs fail at that point because they just take a copycat idea and say, I will also do this. And they bet on themselves for execution. That's not the way to go about it.
And should
Mr.
we
Shah, yeah, please continue.
and as an entrepreneur, should we focus more on the long term or on the short term?
In what sense? Focus in what?
So one is survivability and profitability, both of them.
Okay. So if your house is on fire and you need to garden, what would you do?
Look at the short term.
You put a
So,
fire out, right?
Yeah.
And entrepreneurship is that you're putting on fires every day, right? I mean, and so
Okay.
the short term has to be important, but every now and then you have to be looking at long term. What is the vision for that company? Does it make sense now? Like I said, a lot of macro factors changing, but initially when you're ideating, it'll be about sort of long term. What is this idea? Pressure tested to say, is there really something unique here or not? And once you find that, it becomes all about execution. Day to day, you got to make progress. And that is one of the biggest differences between entrepreneurship and even some of my companies that are at growth stage now, right? So past 50 million revenue and so on. I'm pushing them and their teams when they're creating new products. I'm like, boss, think like a startup. You got to show me progress like week on week, not like, okay, I'll do a 2-month project to think about what the market wants. That's not how entrepreneurship works, right? So, I mean, this naturally happens as the companies become bigger and bigger, you get slower. It's natural, but as an entrepreneur, that's why you got to be like trying to move mountains like every single day, every single hour. And so the short term becomes mostly important once you've done a little bit of the thinking over the long term.
Okay.
So I have another question. So when it comes to the point where you're as a startup pitching to investors, for your business and to get funding, is there a point where, like, when you pitch your idea, because these people are wealthy, I'm talking about the investors, they're quite wealthy, they have the resources, can they just pick up your idea, especially when you don't have any, like, legal protection such as a patent, and pursue it elsewhere without your knowledge? So what can you do to try and, like, reduce the risk of your idea being completely stolen, especially when you don't have a patent for your idea?
And what's your sense? Can you protect it?
So no, technically no, because it's an online platform.
That's
You
it.
can't
That's what you
connect.
assume, right? Like, I mean, you always assume that the other guy knows everything that you know and more, right?
Like,
That's why entrepreneurship is a knife fight, right? Like, you are in it day to day, kind of figuring it out. Look, I won't say that it doesn't happen. It does happen, but it's like that unless you have the wherewithal to just stay in stealth mode for a long period of time, build out everything, and then come out to the races sort of fully charged up, you got to take your bets on people. And just like entrepreneurs, like VCs also live by their reputation, right? So you can find out, okay, hey, what is this guy like? Is he helpful? Is he not helpful? Is he a vulture capitalist? Is he going to take my idea and run with it? It's possible, but you try and do that before you kind of go and you figure out how much to share, right? You don't have to share everything in one go. You kind of open the onion, peel the onion one layer at a time. So saying, okay, this is the idea. What do you guys think? I'm not going to tell you how I'm solving that problem, but this is a problem, right? And as you get more comfortable, maybe you share more, because eventually you're going to have to give them more details, right, for them to take that bet on and invest on you relative to 900 other people. But you can't. There's no zero. This thing, even patents and all that. Look, like legal stuff, challenges take time and money. By the time you sit fighting in courts for that, it's too late, right? Your company's dead. So you have to assume that, and that's why entrepreneurship is about moving so fast. You are moving faster than anyone else, and hence you can capture that opportunity faster than everyone else. That's why I said that impatience is a very important virtue.
Yeah. The problem for me isn't really the time, it's more of the money. But I think I've also been advised that, like, before pitching my entire idea to the investors, so what we do is we send them like a very brief about the idea, right? And if they are interested, we get them to sign an NDA, possibly, so that they come and then we show them the idea. But then there's no way you can eventually trace it.
Yeah,
So
that's what I'm
what would
saying. Like,
yeah,
you have those protections, you can do NDAs and stuff like that, but frankly, most NDAs are not enforceable. That's the truth,
yeah,
right? And like I said, by the time you go fight those, so you should do a little bit of your homework on who you're pitching to and whether that guy makes sense or not, right? I mean, versus assuming that you have to, pitch everyone. That being said, look, early on in your life, I mean, you have to realize there's a probability curve, right? Like most startups fail. There's a reason for that, right? It
yeah,
could be wrong timing. It could be, that you're not the right fit. It was not a great idea, whatever. But there is a chance that, yeah, so you have to trust that, some of the other stuff that's not in your control, you will get in your control, or luck will favor you. But I'm not going to lie and say, there's a zero risk way of doing entrepreneurship.
yeah,
All I'm
absolutely,
saying
yeah.
is assume the worst, and if you do that and your team moves fast, you'll hopefully make it.
All right. Yeah.
So let me maybe switch gears, because I talked about sort of the traits for the entrepreneurs. Maybe I should talk a little bit about the traits or the skills required for the VC side. Right. So where entrepreneurs, like we talked about, are ambitious, they're comfortable taking risk. VCs in general, or finance in general, is more risk averse, right? Because it forces that risk aversion is what forces you to develop deep conviction. Because eventually, remember that a venture capitalist lives and dies by his or her sort of investment track record, right? So the track record of investments I'm making is going to stick with me now as an investor forever. If they're good, awesome. If they're bad, that's going to stick with me too, right? And then those returns kind of and they follow your whole life. So generally they're more risk averse. I'm not saying you have to take risk, right? You have to bet on certain people, you have to bet on certain ideas. But if you think about a quantum of 0 to 100, where on a risk scale you want entrepreneurs to be in that 85 to 100 zone. For VCs, it'll be sort of in that maybe 40 to 60, right? So materially lower. Where entrepreneurship is a lot more about sort of teamwork, culture, kind of having the bigger team. VCs need to be comfortable sort of working alone, right? They're very lean teams, often distributed. So where earlier, with my LinkedIn, I used to be walking the floors, talking to my 1,000 employees every now and then, or with Freshworks, the same thing. Here I'm operating out of a home office in more cases, talking to entrepreneurs. I do meet my team, we do have calls and stuff like that, but you have to be comfortable working alone. So a little bit, again, different skill set. Where we talked about tenacity on the behalf of sort of entrepreneurs being very important. The ability to influence others becomes very important for a venture capitalist, right? And I'm talking both sort of the IQ, like you're smart, you have ideas, and hence others will listen, you can influence, as well as EQ, right? Emotional quotient, where how do I get you to understand that I have your back and I'm saying something for the better of you, so that you as an entrepreneur kind of take my advice and do something different, right? So that's one trait that a VC needs to develop. We talked about domain knowledge and passion on behalf of the entrepreneur. Exactly the same kind of applies to VCs as well, where you have to actually have very deep domain expertise, right? That's how you can sniff out and tell that this idea is good, this idea is not good, because you're almost, as well versed on the domain, as I mean, actually more so than the entrepreneur. You look wide, whereas the entrepreneur is going to look at a particular problem or a use case. And that gives you that informed point of view on what bets to take on, right? And who is the LPs? The LPs are limited partners. They're the investors to the investor. So they put there these large pension funds and sovereign wealth funds who invest in VC funds. So you have to have connects. Those guys, one guy's like have thesis on construction and infrastructure, another has on tech, another has on telecom. So that's that domain, deep domain expertise helps. One other thing that you have to have, which an entrepreneur doesn't need to have, is non-linear thinking, right? That's what helps you see what others don't. Why would someone bet on um, a Zoom or a Swiggy early on? When that's not the world that when Harsha was starting Swiggy, and my buddy Anand, who we went to business school together, he took the bet from Axel on Swiggy. At that time, food delivery was really unheard of, right? I mean, it was like, oh, what the hell is this? Some guy's going to order online? Nahi hoga, right? So you have to have that non-linear thinking to say, hey, can this go from a 0 to 1,000? Can it go from 1,000 to a million, right? Because those are the bets that you want to take. So you have to have that ability to think sort of in a non-linear fashion. We talked about impatience on behalf of the entrepreneurs, very important trait. On the side of the venture capitalists, you have to have patience, right? Because you need to work through others. You don't directly own or control anything. And you have to also have the patience to not jump on every deal that you see. That's tempting early on. I can kind of attest to it, having in that switch, say, oh, a lot of ideas look cool. You have to have patience and see how the ideas and the teams perform to your questions, dig deeper, think and play devil's advocate to yourself. Do I really want to do this deal? Because again, remember that deal is going to follow me my whole life, etc. So there's an aspect of patience that comes into play as a venture capitalist. Again, you lose a lot more deals than you will win as venture capitalists. So you have the patience, to say, okay, the right deals will come my way. And then the last sort of attribute we talked about for entrepreneurs was this latent sales talent, right? Ability to sell you on their product or to join their team and so on. In case of sort of the VCs or venture capital, it's more of a financial mindset. There is an element of sales and networking with people and entrepreneurs and all of that stuff, but the finance piece, the financial mindset of, how a deal will get constructed is important there. So those are, comparing and contrasting the skills and attitudes for an entrepreneur versus a venture capitalist. There is an aspect that I think is common to both, which is what I call the learner profile, right? I think learner profile, is someone who's always constantly learning and refining. In my career, I myself have espoused it. I have bet big on people, my whole life who espouse this, of saying, you're willing to listen, you're willing to take a little bit of risk, you're willing to self-reflect, and say, hey, what am I doing right? What am I not doing well? You're honest with yourself. Oh, these are things that are not working. Let me actually try something different. Willingness to learn. You have confidence, and even though you don't know everything, you're going to take some risk. You know when to focus and when to zoom out. So it's what I call the telescope and the microscope, right? So there's times at which you have to zoom into something, you have to do the microscope, but there's also times that you need to step back and look at the telescope and what's happening in the bigger picture, right? So that's what I call the learner profile, which I think is common to any successful person, whether you're a VC or an entrepreneur. So that kind of, was how I was thinking about some of the skills or the attitudes. I was going to move on to the next question on pros and cons of entrepreneurship, but any questions on skills, attitudes? No? Okay.
I have a question.
Yeah, Avnish.
Suppose there is a phase in a person's life when he runs out of any startup ideas and stuff like that. So what do you think a person should do in that time? Should he take some time off or should he dig deeper, according to you?
Yeah, look, if you have no ideas, then go do something with your life, right? Like, you never know where the inspiration for the next idea comes from, right? And if you're not doing anything else, might as well learn, right? I mean, again, goes back to that learner profile. Okay, I'll join someone else's startup, see what's happening in their life, and how do they learn what's working, what's not working through their journey, or go work at a larger company, get that experience, and seeing, okay, I'll understand the space by working at Microsoft, and I'll get some brand name so it'll help me later, right? Look, not everyone needs to be a founder and an entrepreneur. Not everyone can be a founder and entrepreneur. There's no shame in being like an early employee into someone else's startup, and you can still make a good chunk of money, right? Or there's people who are better. So the 0 to 1 journey, the 1 to 10 journey, the 10 to 100 journey, completely different journeys, completely different skill sets required. And often, the founder himself, one of the biggest successful traits of an entrepreneur is recognizing what they're good at and bringing in the other people what they're not good at. Right? There's some amazing 0 to 1 founders, great with ideation and conceptualizing that, but they don't know how to scale the company, right? And so you have to bring in, others at the right time, another CEO, another COO, whatever. Or maybe someone's really good at scaling, but they suck at ideation. And so recognizing that and joining and working at a growth stage startup would be better for you because those does play to your strengths, right? So always know what your strengths are. You have to be honest with yourself and obviously your friends around you, because that's really important. That's how you find the right fit, right? But if you're just you shouldn't be being an entrepreneur for the sake of being an entrepreneur. If anything, you're going to be starving, right? So you don't want to do that. because there's very, very high risk associated with it. So like I typically, tell people, look, unless you're all consumed with the problem, something, man, like I need to change this. Why is there no way to kind of, monitor what's happening with my car? I'm just all consumed with that problem, right? And then that's when stuff starts happening. Or, why is, I don't know, why are dentist clinics so old fashioned in the way they run even today? Whatever it is, right? Like you have to have deep passion around that. And then until that point, go do something else with your life. And, maybe, inspiration will strike, maybe it won't. But you can be part of someone else's journey and there's no shame in that. Cool. Was there another question, Pancham, you had?
Yes, sir, I have a question.
No. Yeah, okay.
So what are the required skills to have before starting a business or a startup? Like the minimum required skills.
I mean, the beauty of entrepreneurship is there is no minimum. It depends on the idea. There's school dropouts that have, founded the biggest companies in the world. There's people who have never had any academic training. So that's the beauty of entrepreneurship is, you really control your own destiny, right? So there is no requirement for entrepreneurship, but yeah, I mean, you need to like those three things that a VC would look for, right? Team, TAM, tenacity. Do you have a good team around you, that understands the particular problem that you're facing? Is that problem a big enough problem, the TAM being big? And then are you able to showcase that tenacity that, the first sign of trouble, you're not going to go run for the hills and say, okay, chalo ho gaya, I'm going to now go join Microsoft. But you will stick and fight and figure stuff out, right? And so that's what you got to show to the VC.
Sir, I have a question.
Yeah, please.
Sir, I want to ask that how would you start a career in venture capitalism if you had to start there, and what would be the skills required for it?
Yeah. So look, there's typically only two entry points into venture capital, right? And I think when Sid and I were kind of going exchanging back and forth, it was like, oh, VC comes later in your life, right? That's not true. The best entry point into venture capital is early on, right? Just after maybe in India, you do your MBA immediately after your undergrad, but sometime after that, right? As an analyst or an associate getting in, and then you grow through the firm, right? You build your track record within it. You learn, like venture capital or even consulting for that matter, is a very apprenticeship type model, right? So in McKinsey, for example, where I spent 7 years, the entry point is typically either after your undergrad or after your MBA, right? And then you grow through the organization. You understand, you do a bunch of products, you understand how the firm works, what are the frameworks that they have, and then you start understanding of what does it mean to be like a engagement manager, what does it mean to be a partner, what does it mean to be a senior partner, and so on. And so but the firm operates a certain way, so they expect that. So same thing with venture capital. Venture capital is very hard to break into, by the way, so I'll just caution you, it's harder even than entrepreneurship, because the venture capital by design is very lean, right? They're not huge teams. And so you really, really need to stand out to actually, get into venture capital. But, there's that entry point sort of after your MBA here. And or the entry point comes much later in your life. Sometimes if you've gone off and been an entrepreneur, done some great things, then the venture capital is this is like, oh man, that pattern recognition that you will having operated will be extremely useful for you as an investor, because you know what works, what doesn't work. Maybe then you come in laterally, into as a, vice president principal or something. But I would say again, 80-20 split. 80% of people in venture capital started in venture capital very early in their lives. And so almost, that was one thing I wanted to clarify, is that if you guys have interest in that, then, I would think about it post college rather than I'll go do something else and then join venture capital. It's very hard to break into. But like even at MIT when I was doing my MBA, venture capital guys, the guys who go into internships or full time are the last to get placed. So they are holding on, saying, "Oh, I hope some venture capital firm comes in." And some guys got it and some guys didn't, and then they had to go back to maybe doing, okay, shit, I missed the boat, Microsoft, but I'd really like to apply and maybe get a job somewhere else, right? So I think, if you're interested in in a career in venture capital, I would definitely try and look early on, but realize like what we just talked about, the skills, right, that you need. Financial mindset, you need to sort of be a little bit more risk averse, you need to have some deep domain expertise, some hypotheses, you need to be able to influence others, and you need to be able to comfort working alone. So you have to ask yourself these questions. It's not easy. it's not easy to go and do that. And there's also high stresses, right, associated with anything in finance. I mean, because when you're playing with money and other people's money, and so there's a lot of obligation and pressure on you as well. So look, I think the bottom line here is you have to play to your strengths, right? I think you have to understand what you're good at. You have to be very brutally honest with yourself on what you're not good at. And that's where your friends and your family come in to really help you understand that. You may think you're awesome, and then someone else will say, boss, you suck at this, right? Or someone, you may not realize that you have a strength in a certain area, and your family or your friends will see that and say, hey man, you're really good at counseling others, right? Or mentoring others. That's good. You should kind of think about this, right? So be honest with yourself, and then you'll find the right career path basis that, rather than follow someone else's script. I mean, I grew up here in India. We know that we've been told, "Acha, yahan IIT jana hai, uske baad McKinsey jana hai, uske baad MIT jana hai," all that stuff. I personally don't ascribe to that, but I know that most of us have been brought up that way. But now the beauty with a burgeoning sort of ecosystem of entrepreneurship here in India is we have other options. Whereas when I was growing up, we didn't actually have that many options. So yeah. So hopefully that answers your question.
So I have one more question. So
yeah, go to Sean.
Yeah, so between a private venture capitalist as well as a commercial venture capitalist, who would be more likely to invest, in a business that is at a very, very early stage, in their life cycle? Is it something like, the commercial venture capitalist, wouldn't really be willing to invest due to, they need to, so how does it work, basically?
Look, I mean, it depends, like I said, on the stage, right? Angel, pre-Series A, Series A, then, CD, Series C, CED, then pre-IPO and so on. So it depends on the scale. You're seeing increasingly more professional. Earlier, it used to be that, most VCs, formal VCs started at the Series A and beyond, right? But now you've seen, seed funds, you've seen pre-seed funds. So there is a professionalizing of the earlier stage also. But typically early stage, in the angel stage or the seed stage, you used to see more HNIs, right? Like high net worth individuals, doing angel investing. There are like Mumbai angels, Chennai angels. There's a lot of people who are just basically bands of, people who have money and they want to take some risk. And so, they're doing angel investing. Then you are starting to see, like the Y Combinators of the world, the incubators, that are starting to take bets. So there is more professionalizing of the earlier stage than it used to be. Like, I wouldn't worry about where that capital exactly comes from. Like I said, you need to convert one. Obviously, people that you have a connect with beyond just the money, and you see them as good partners and for you. But I wouldn't spend too much time thinking about whether it's private or whether it's professional and so on at the early stage. It's more about are the terms onerous or not, and do you get the amount that you need to actually go do what you're supposed to do.
I was just asking in the sense that, like, when we start networking and when we start trying to find people that would invest, if we would go for, mainly commercial, mainly private HNIs, as you said, because
that's what I'm saying. I mean, I don't think you will have the choice of doing that. You are just going to go pitch to whoever is going to willing to listen. That's what entrepreneur does, right? They don't take no for an answer. They pitch whoever is willing to listen to them. Be smart about what you pitch. Like I said, don't give away the whole farm. But yeah, I mean, you might start private, and that person might say, oh man, this fund guy I know who's doing seed investing, he would be very good. Like, sometimes people come to me for an angel investment, and I say, oh, let me put you in touch with Let's Venture, right? Like Let's Venture has, like a platform for raising, or let me put you in touch with this other sort of angel investor who's doing it, or this seed fund. So I think the most important thing, Tushar, from sort of your repeat questions in this area, it sounds like maybe you haven't either started your journey or you've faced sort of some problems on your journey. You got to just push past that and just take one step at a time. There is no master plan. There is no perfect way of, who to pitch. Just start the process, put one leg in front of the other, and it will eventually grow. It might seem like there's nothing happening, and then suddenly, everything takes off, right? So just be patient and just keep pitching.
All right. Thank you.
Cool. So let me
Excuse me.
the clock here. Yeah.
I have a doubt. So you were talking about Series A and the coming up with the idea and freshly starting out with a startup. So for different companies, usually some of them they change the base idea in this stage itself. Like For instance, one like the perfect example I was thinking of was YouTube. YouTube started off as a initially as a dating website, but now it's like the hub of learning and entertainment source as well. So what inspires the change when it comes to things like that for an entrepreneur?
Yeah, I mean, the technical term is a pivot, right? Every founder pivots, every company pivots. You have to be ready for it. We as venture capitalists expect it, right? Even that in that sense, like the idea that you pitched me originally on, there's a very small probability that it's exactly what you will actually go do. But I'm still betting because I like the idea. I like that it's a big problem, and you will figure out whether it's the answer that was you stated or a pivoted version of that. You will actually figure it out, right? That's why I'm looking at team time and tenacity, early stage, right? Early when I'm backing it. So you will do pivots. What leads to a pivot? It's just literally if you're an entrepreneur, you got to have your ears to the ground and listen, and to what the market is telling you, right? And if when you're pitching customers, if you're in the MVP stage, you're trying to build something and your engineer is saying, boss, ye nahi hoga, there is no way to solve this. Okay, shit, there's no way to solve this now. Okay, what do I do? What is maybe a slightly adjacent problem that I can go solve, where I can maybe apply this? Or it could be that you're pitching this idea to potential clients or customers, and they're like, look, boss, not easy. Like one of the main things I tell sort of my investee companies is, make sure you understand what is a painkiller and what is a vitamin. A vitamin is a nice to have. Maybe once or twice we will have it, right? Okay, pandemic is come, chalo, vitamin C lete raho. But you'll forget it at some point, or it gets expensive, I'll drop it. But a painkiller, if I have a heart drug or like I have insulin because I have diabetes, it's a must have. You have to pay me for it. You will not change. Your idea as an entrepreneur has to be the painkiller, not the vitamin. Right? And so you might pivot to understand what is a painkiller. Your client, you might have thought that this is a big problem for the client, and you go pitch it, and the client says, yeah, that is a problem, but it's a nice to have, man. It's okay. But this problem, this is the main problem that I really am struggling with. And then as you see that across some clients, you might say, oh shit, maybe I should go solve that problem. Let's put our energy to that, to solving that instead, right? So you just have to have your ears to the ground. That's the learner profile I was talking about. Be honest with yourself, saying, "Ye nahi ho raha. I thought it was a cool idea, but it's not. It's a nice to have, or it's a bad idea. Let me go find another idea in the same space with similar, team and clients that will actually go." So that's what leads to pivots. Or it could be, hey, a competition made a move which causes you to pivot. You thought you were doing something, and now suddenly, Google came out and did something which changed. Like one of my angel investments, young team, I loved, Akanshu and his energy. Always was thinking, always was pivoting. RBI rule changed. They're going after, credit cards for millennials and stuff like that. Completely changed their value proposition. It happens for no fault of theirs. They worked like dogs. They really worked hard. They did everything possible. They got an MVP. They had like a sign up list of people, like guys, millennials who were aching to get the product. So all the right signs. RBI changes one rule, it's over. This happens. That's why there's so many failures in entrepreneurship, because there's all these other macro factors that could kill you. But guess what? He's picking himself up and going after something else now, right? And a different idea. So, like I said, that tenacity has to be there, because 8 or 9 times out of 10, things are not going to go your way. And that's okay. That's okay. You realize that's every entrepreneur's journey.
So essentially what you're saying is that you need to find a problem which is a need rather than a want, right? So it has to be something that the client looks at and he's like, "Hi, I want this. Like, we need this in today's world." And that can vary depending upon.
Within need also, there are some needs that are very, very high priority that I'll pay for, and there are some that are nice to have. It's still a need, but it's a nice to have. I'm saying you go after the must have, not the nice to have, because if it's on someone's innovation list, idea acha hai karenge, that's not an idea. If he's losing business, or he's losing customers or something because of something, those are the problems you want to tackle, because they're going to be willing to pay for it, right?
All right.
And then there's ideas that you will not be able to get this validation. Like think about the guys who started Clubhouse, or think about the guys who maybe, even you take Harsha at Swiggy at that time, or there's so many crazy out there ideas that have no bearing earlier, right? But you have so much conviction that that's what needs to be, that is the need of the hour. Oftentimes people don't know what they don't know, right? Now, no one asked Steve Jobs for an iPhone. He came out with it, right? And he created a great idea that was there, and then you follow. So there will be those ideas. It's a 1 in a million shot. The probability of those huge, crazy successes because you invented something completely different is low, but they're there. So, if inspiration strikes and you guys found the next, Zoom, right? At that time, who the hell would have said, oh, meetings will happen in this fashion online? Very, very low probability, right? So there are those. Don't get discouraged by, like saying that, okay, like don't let someone else tell you whether your idea is a good idea or not. That's my point. But be honest with yourself, whether that idea is a must have idea or a nice to have idea, and whether you have the chops to solve that idea or not. You may not have the chops, and that's why you got to build the team around you who has the chops to actually go solve that idea.
So I have one final question. So I've seen that usually people that really don't have much of a technological background, they usually have good ideas and something they would like to pursue, but they lack the finance and the knowledge to actually put that idea into implementation, such as like building an app. So what they do is they team with like second or third year computer science students, who are studying in university, who have a good idea of that, and they give them a percentage share in their company. Considering you study computer science, have you ever seen that happen? And like, has it ever worked out pretty well in front of you, or what are your thoughts basically on that?
Look, you have to build a team, right? You are not a Iron Man that will solve everything yourself. It's actually, there are several cases where, as an angel investor, or I mean, not as a growth investor, because by that time the team is built typically, but you think, amazing guy, this guy is amazing, but he's not going to work with others. You pass. You don't invest, right? Like lone wolf never scales a startup. That I can guarantee you. That's why the teamwork and culture is very, 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 very important, right? So I think you have to, that's what you look for in the team early stage. You're saying, okay, idea is decent, but like, can this team execute? Is the team well balanced? Do they bring different points of view? Do they have diversity in their thought? Do they have diversity in their experiences? So there's tech guy, there's some kind of sales-ish guy. There may be someone who's a more customer support type guy or gal, right? And so on. So you have to think about your team. You normally always almost never invest in a single founder. You typically have like 2 or 3 founders. Ideally, you want to see that those founders have worked together again, or gone to college together. Something. So there's some connect, because the bad time will come. I guarantee you that will come. And at those times, you're going to start, if you're going to start fighting and the team breaks, that's a disaster for the VC, right? And that's why they ask and try and see, okay, where did you guys meet? What is the thing? Have you worked together? If you're friends outside, there's chance that at least, when bad times come, you don't turn on each other. Right. So yeah, thinking about who's on your team and why they're there is an extremely important part of getting right early on. Whether that comes from within your college or somewhere else, doesn't matter. And I know that there are single founders who sometimes go to these networking events to find a co-founder. However it happens, you need to go find people who bring complementary skill sets to you.
Right. So if we're like a team in school of high school students, and then we're now to avoid the cost of paying to build the app, we were considering that we could possibly get a second year student in the UK, possibly, or some of our contacts who may we may give a small share in the business, and they can code it for us and help us that way, because first of all, that would avoid cost for us, and secondly, it'll help them as well, because it can be seen as a project they did during their college. And from what I've heard in second year in the UK, most of them have a very good idea of what they're doing, and they really just want to get into the industry, but they have to wait for third year.
You want the honest answer? I think honest answer is, if it's someone's project, it's not going to happen.
Right.
Okay? That guy or gal has to be consumed like you around this idea. That's why you have to be, as an entrepreneur, really like so consumed with the idea that you can see the passion in others and you spark that passion. Yaar, ye chadai karni hai, and I will follow you to the end. That's what like an entrepreneur does, right? They're leading the march and others are following, but they must bring that same passion. So yes, I mean, if you have no other options, there's that. There's app companies that just build. But if that app is key to your idea, then why would you outsource it and allow someone else to do it? Because obviously they can't see that same problem the way you do, right? Now, if you need that to get started, you need that to get started. But then, the broader problem is, if you're doing a tech startup and you're outsourcing the tech, what does that mean? What does that make you, right?
Yeah,
So
makes
again, there's no one size fits all, because there's lots of different types of ideas and stuff out there. Sometimes the USP is in the operations, it's not in the tech, right? We all just assume it has to be tech. It doesn't have to be. So I think all of it. If you are honest with yourself, truly honest with yourself, look in the mirror and say, "Boss, you suck at this," right? Or this thing, and you have the right kind of advisors around you, whether it's through your friends or family, then you'll be sorted out. Otherwise, you might take these, and fine, you'll take some of these decisions and you'll fail through that. I gave it to this senior student. That guy didn't do anything, or he did something really crappy. Okay, I learned from that. Now I'm going to pivot, right? I'm going to go now learning from that. Now I'm not going to give to a student. I'm going to give it to someone else, or I'm going to go find a tech co-founder, whatever it is. So entrepreneurship is all about, like I said, one foot in front of the other. You got to keep making progress. You learn through that. There's a lot of things that will go wrong, and that's okay.
Yeah, thank you. I really appreciate the honesty. Thank you.
Right. Thank you so very much, Mr. Nishant. We'll take one last question if anybody has anything to ask. I know you had a lot to cover still, but unfortunately, we are very hard pressed on time. And it was an absolute amazing talk. If anybody has any last question, I mean, please, ask Mr. Nishant now.
Can we get your email?
Yeah, I was
if you
about
want
to
to
ask.
message you.
Yeah, you guys can just message me on LinkedIn. You don't need to be connected to me to do that. I'll also throw out there that, as a matter of policy, I don't accept connections with people that I don't know, because, in LinkedIn, a lot of, what my news, my insights get curated based on my network. But that doesn't mean I don't check. So you can still send me a message and I will respond to that message. My email, from work is nishant@avatar.vc, but we do growth stage investing, so likely, none of your pitches or ideas will be, relevant to us as a fund. But maybe I'll share my last thoughts, right? I'm jealous. Like I would love to be in your shoes right now, where you're, looking at your career choices, you're looking at your startup ideas. It's a very, very exciting time in life. I wish you tons of success with it. Maybe, we were going to cover the entrepreneurship. I'll just cover the cons, because I also want to make sure that you guys are honest with yourselves, that just because entrepreneurship is cool does not the reason to do it. There's lots of careers that allow you to do it. And so the biggest con for entrepreneurship is that there's a very high risk, there's a lot of frustration, there's a lot of instability, right? And not just for you, but your family around you. And so, like, as you get older as an entrepreneur, you maybe have a wife or a husband, you may have kids and so on. So it's not for everyone. But I can tell you, it's one of the most fulfilling careers if you do, right? And again, entrepreneurship can take many, it can be a 0 to 1, or I became a repeat entrepreneur when I came here to run LinkedIn India. And then when I went to run Freshworks, again, I count myself as an entrepreneur taking risks. It's just at a little later stage of that, right? Of that build out journey. But realize that there's cons. Similarly, as a VC, there is risks. You're not in the driver's seat. You're at the mercy of someone else, even though you know what to do. The other person may not actually, and it's his or her company. So you have to kind of respect that space. So something you have to consciously remember, and all your rewards are back-end loaded. So VC funds are 10 years. You put in your money upfront because you have to showcase that, you're willing to take risk on yourself. So you're putting some of your own money in, and then, you hopefully get some rewards at the end of a 10-year, journey when the fund actually liquidates. And so realize that there is material cons to any career that you do. And the right career is the one that you're willing to do despite that con. So with that, I wish you guys a lot of success and luck with your journeys ahead.
Thank you so much, Mr. Nishant, for an excellent session and spending time with the students. I'm certain that the students have learned a lot from your experience. And the one thing which I'm personally taking away from this session is the fact you mentioned about entrepreneurship being a knife fight, and to assume the worst and aspire for the best. I very quickly just want to add a quick note. As you may already know, that COVID is making organizations think differently and do things very differently. And ISBF is no exception to that. And as a token of appreciation, we would like to extend a thank you voucher from an apparel startup founded by ISBF students called Emacity, a startup that desires to contribute towards living sustainably by enabling responsible consumption in the irresponsible era of fast fashion. So once again, thank you so very much. It was delightful to hear your experience, and I'm sure the students are going to reach out to you on LinkedIn, as you have mentioned. Thank you so very much once again.
Wonderful. Thank you, guys. Good luck. Have a great day. Bye.